Hello everyone, and welcome back to another episode of Coffee and Crypto. My name is Don. Thank you so much for tuning in and watching today's video. Again, of course, I have a great episode for you to see, hear, listen, watch, whatever you do, and however you consume coffee and crypto. I have an absolute belter of an episode for you. So first things first, let's take a look at today's prices. As we always do, we look at the top 10 in the market. Have a quick kind of brief overview, I would say, because there's not much going on. Again, there's really no movement whatsoever the past 24 hours on the top 10, but let me cover them anyway. Let me break them down and explain them in a bit more detail for you. So first things first, Bitcoin is currently sitting at $30,110. We then have Ethereum at $1,850. We then have BNB at $232, XRP at 46 cents. We then have Cardano at 28 cents, Dogecoin at 0.06, Solana at $20, and then lastly we have Tron at 0.07. So, like I said, not much movement the past kind of 24 hours from the market. Down about 1% across the board, with some other altcoins seeing deeper kind of 3-4% kind of down or declines in price, should we say. But again, nothing to really kind of worry about. And weekly close last night. We've seen a bit of a okay level, but we did see a bit of price action last night. If you are watching it live or you watched, potentially you watched Mitch Ray last night, then you'll see that there was a bit of a decline leading up after the closure. So the trending coins are always quite a kind of fun thing to look at, I suppose, these days. And Pepe, for whatever reason, is still trending. Shiba Inu is also trending, and PancakeSwap is trending. So 3 very random coins to be trending, I would say. 3 meme coins as well, to an extent. I guess PancakeSwap isn't classed as a meme coin, but 3 low cap, small coins, not so big in terms of market share nowadays anyway, are trending on CoinMarketCap, which is always quite strange. But anyway, let's move on to the first part of today's news. So we have Ripple Labs. So we all know who Ripple Labs are by this point. Ripple Labs are the people behind XRP. So Ripple Labs are to revolutionize real estate industry through tokenization. Now, this is something that we talk about in our crypto training that we do. Kind of every so often, we will bring up the point of CBDCs, NFTs, you know, the tokenization in the background behind the crypto asset itself. This being a big part of it, so tokenizing property or assets, gold, whatever it may be. Tokenizing is a huge kind of part to play in the future of crypto. And of course, Ripple are kind of at the forefront of that. So, digital payment and blockchain technology company Ripple Labs has announced an initiative. Apologies. Sometimes I do mess up because I overthink my words, but let me try that again. Ripple Labs has announced I can't even say it, initiative to transform the real estate industry using tokenization. Anthony Welfare, central bank digital currency, so CBDCs, we all know what that is, advisor at Ripple, highlighted the growing global interest in CBDCs and stablecoins in a July 7th tweet. He emphasised that the Ripple's team is actively exploring practical applications for CBDCs and stablecoins, focusing on the tokenizing of real estate assets. So, during a fintech conference in Romania, the Welfare presented a use case that combines the digital Hong Kong dollar, which is EHKD, which is, again, I don't know if you've heard much about that, but again, huge. Anything coming out of the kind of Chinese market and Hong Kong market recently has been really pro-crypto and really positive to see. So the digital Hong Kong dollar is no different. Now, tokenized real estate and finance lending protocols. This also means that the innovative pilot programs aims to enable users to tokenize real estate assets and utilize them as collateral for loans and leveraging Ripple's CBDC platform. So, in its exploration of real estate tokenization and using blockchain and digital currencies, Ripple is looking to tackle current obstacles in the real estate sector. So the whole kind of point I'm trying to make here, and the whole point I'm covering this article, as much as it's not really like crypto, the reason I'm covering this article is we are really big fans of tokenization. So tokenization of properties, again, watches, art, classic cars, whatever it may be, of assets that people may not be able to afford all at once. So a group of people can afford to buy parts of the property or whatever it may be, and that is due to tokenization. So a lot of it's using the non-fungible tokens, kind of underlying assets, shall we say, because it's all done by smart contracts. There's no way of really scamming anyone. It's all legit. And it's a very better, in my opinion, it's a better way and cleaner way of having multiple investments across multiple different platforms and different sectors like property and cars, whatever it may be. And Ripple are obviously trying to push the CBDC front as well, and they're helping banks and governments and whatnot get behind and actually make the CBDCs work. And they're also going to be helping other companies or other countries and whatever it may be push the tokenization of properties because of their, the real reason is because of their background, because of the product that Ripple have. Yes, they utilize XRP for the cross-border payments, but they're also pushing the other technologies that they use that will then help tokenizing of other properties via the XRPL, which is the XRP ledger and whatnot. And yeah, it just makes sense. Again, another reason why we are so behind. Well, first of all, XRP is an investment kind of vehicle, but Ripple, the company in general, because it's not just XRP that they're trying to work on. They're working on all of this stuff as well. So yeah, again, for me personally, it's a no-brainer. But that's up to you to decide if you think that Ripple is a worthy company or not, and you believe in what they're doing. I personally do. Now, next then, a few bits on ETFs. So, of course, ETF news has been the hot topic of conversation the past month. There's still a lot of chat coming from companies like JP Morgan. Now, JP Morgan, again, for anyone that knows pretty much anything to do with finance and the history of finance, will know that JP Morgan are not the nicest guys to deal with. They are compared to be part of the Matrix. Some people will say that. But yeah, regardless of what you kind of think of them, they are proven, in fact, factually proven, not to be the best players in the market. So whenever I do see something from them mentioning, whether it's good or bad, to be honest, I don't really particularly like to follow it because I don't trust them. But anyway, the latest from them is that ETF approval may boost Bitcoin's liquidity, but it won't be a game changer. Right, okay. Let's get into this. What are they saying? So, a possible approval of a spot Bitcoin exchange traded fund, so an ETF, won't be a game changer for crypto markets, although it might benefit the leading cryptocurrency, according to a report by JP Morgan's managing director. Now, based in London, the JP Morgan's global market strategy team, he believes that Bitcoin ETF in the US would have a similar impact as those seen in Canada and Europe, where spot ETFs have been around for some time. I already don't agree with them, but I'll continue. According to the report seen by Bloomberg, Bitcoin's ETF have overall attracted little investor interest in other jurisdictions in the past 2 years, further failing to benefit from investor outflows from gold ETFs. Now, the strategist also sees the benefits of a Bitcoin fund receiving the green light in America, and according to him, an approval could bring more liquidity to the Bitcoin markets, but could also lead to a migration of trading activity from BTC futures products. I'm not so sure about that. Now, his views go in different direction from the high expectations surrounded from an approval of a Bitcoin ETF in the US. During an interview on July 6, BlackRock CEO Larry Fink, again, you may have all seen or heard of this kind of topic from Larry Fink. He was on the news, essentially publicly speaking about Bitcoin, which I'm going to cover a little bit later on in today's video. But during an interview, he suggested that investors could turn to Bitcoin as a hedge against inflation and the devaluation of fiat currencies. Again, I want to just quote this part here from Larry Fink because, again, you may have heard it last week or you may have seen it last week, but this is super, super big news, the fact that he's doing this publicly on TV, so I want to make a point of it. Let's be clear, Bitcoin is an international asset, said Fink, adding that it's not based on any one currency, and so it can be represented an asset that people can play as an alternative. As reported by the Labour Department, the annual inflation rate for the US was 4% for the 12 months ending in May. Now, again, Larry Fink, let's move off from him for a second. He's pro-crypto, pro-Bitcoin. He sees it for what it is. He manages a fund of, I think it's like $8.6 trillion, I think it is, they've got under management. I'll correct that in a moment after I get through this. But anyway, so Larry Fink, again, one of the largest asset managers in the world based in the US, has publicly spoken out about how positive and how much of a need there is for investments in Bitcoin. However, JP Morgan, who for whatever reason, well, I want to say for whatever reason, I know the reason behind it, but for whatever reason, they are trying to put it down and trying to brush off the ETF, saying that it won't have the same effect in the US to what it did in Europe. I mean, I guess America is larger in sense of investment, so there's a lot of people in America that invest in crypto. Yes, regulation isn't quite there. However, that's because the ETFs, obviously, well, it's not because of, but part of that is the ETF people who would invest in crypto wouldn't ever touch it until they get approval from an ETF, because they're not degenerate investors like you or I. They need, or they want to go through investment vehicles like BlackRock or like Fidelity or any other of these, kind of ARK, for example, another big company. So people who have a lot of money tend to not go through Coinbase or even SwissBorg or Binance or whoever. They don't tend to go through those exchanges and kind of self-custody the assets. They prefer to go through the BlackRocks, the Fidelities, the ARK investings, because they've got a bit more security. Yes, they don't mind paying a little bit more for it because they've got that security of someone managing their money for them, essentially, or at least pointing them in the right direction. So the ETF is, I would say, needed in that aspect. Yes, it will probably drive the prices of Bitcoin up. Yes, it might be harder to get some Bitcoin. Yes, people will be regretful for not getting it earlier, but everyone's had time to buy it. It's not like there's an open and close time. There's always been time to buy and invest in Bitcoin. Just because ETFs are getting approved doesn't mean that you or I should be buying it. We can buy it at any point from any of the exchanges that I've mentioned so far, especially SwissBorg. But JP Morgan is trying to do what they always do, is put down and put out negative news so that it suppresses the prices for as long as possible, and it scares the retail investor out for as long as possible, so that they can buy it for as cheap as possible for as long as possible. It's pretty self-explanatory. It happened before. JP Morgan, again, you can go and Google this. Is it Jamie Dimon? Is that his name? The guy from JP Morgan essentially for years was telling people not to invest in Bitcoin. If you're seen or spoken about in JP Morgan to be if you're known to be speaking about Bitcoin whilst working for JP Morgan, you will be sacked. It's essentially a bad word in here. Don't invest in it. Don't touch it. It's fool's money, whatever it may be. But it then came out a couple of years later that he was buying it the whole time, and it was all part of his plan to keep the prices suppressed so that no one else would buy it and the prices wouldn't skyrocket. Because if JP Morgan, the size of JP Morgan, if they were to say that they are buying crypto or they're pro-crypto or whatever it is, everyone, all the retail investors then jump on board and it runs the price up, and it wouldn't make sense because then they can't buy it for less. So yeah, anyway, pretty self-explanatory hopefully with the way I've kind of explained that, and yeah, hopefully it makes sense. Now, more on the ETF stuff then. So the BlackRock ETF stirs US Bitcoin buy-in as researchers says get off zero. So I've kind of been touching on this the past few weeks, but Bitcoin will suck in all prosperity gains in future and leave behind those who have no exposure as a result. Now, in a Twitter thread on July 8th, an investor called Luke delivered a bold vision of how Bitcoin would become society's base money. Again, I'm not 100% behind this quite yet. Yes, in the future we might see this, but I'm not completely behind it quite yet. We're quite a few years away from that yet. But anyway, investor tells would-be Bitcoin buyers to get off zero. So what started off as a commentary on how artificial intelligence is welcome in Bitcoin soon became a dramatic outline of how it should end up as the world's go-to currency. Now, Bitcoin's key attribute is a fixed, immutable supply, and it makes it unique as a future-proof asset. Early innovation, even AI, will rush as quickly as possible to competitively force prices down. Every country will rush as quickly as possible to print currency to force prices up and sustain credit markets. Both of these forces will increase the speed, is what he wrote. And that's the speed of Bitcoin, of course. Bitcoin, meanwhile, will remain constant in its emission, and as a result, even a tiny exposure is a world away from nothing at all. Pretty self-explanatory, hopefully, and hopefully you've kind of took on board what I've been saying the past few weeks. Well, actually the past few years at this point, but the last few weeks in particular. We have less in common with the future than the past. Bitcoin is trading for hundreds of millions of political currency units in many nations already. But the actual big deal is that all this prosperity gains from all future innovations will flow into society's base money, which is Bitcoin. And this is why it's crucial for people to get off zero. Saying Bitcoin is digital gold is like saying a locomotive is an iron horse. Now, again, the reason I brought this to your attention is all the ETF stuff is drawing a lot of attention. It's getting bigger players more excited for the market. It's also getting retail investors more excited for the market because they're seeing the possibilities of Bitcoin having a run, everyone wanting to buy it, a supply and demand shock happening, therefore they need to buy it ASAP, which then causes the prices to run up. Now, the point I'm trying to make, again, by showing this article is getting off zero is super important. What does that mean? Basically, all it means is make sure that you have some sort of Bitcoin in your portfolio. So anything is better than zero. So whether it's $100, $200, $500, or 100 grand at this point, the point is this guy, I don't really actually know who this guy is. I think he's just a Twitter name. This investor guy called Luke has kind of made a point of making sure you get off zero and making sure you buy at least some sort of Bitcoin and have it in your holdings. Now, I get it. Not everyone understands it. Maybe you watching this don't quite understand it. That's fine. That's kind of why I'm here, to try and help you. But at least learn about it. Do your best if you can afford to do it after doing some research to buy one. And yeah, it's something that I've been saying for years and years and years and months at this point on this channel, that if you think that someone like BlackRock, who again have trillions, not billions, not millions, they have trillions of dollars under management, if they are pro-crypto, they're pro-Bitcoin, they believe it's a future investment vehicle, but you don't, then I suggest that you start researching a bit more and finding out why that person who's, again, managing trillions seems to believe in it more than what you do, who potentially doesn't invest in it at all. So there's obviously a bit of a discrepancy here. So yeah, do a bit of research, get back to me, let me know what you think. If after doing some research you still don't believe in it, that's fine. That is completely fine. The main point I'm trying to make here is before casting judgment, do a little bit of research, educate a little bit on it, and yeah, then cast your judgment and decide whether it's for you or it's not for you. Now, that's majority of the news articles I wanted to cover. Now, the past few weeks have been quite light in terms of news articles other than ETF news, so it has been quite difficult to try and get some news that I feel that would benefit you all, but we're doing well. So far, so good. Now, what I have been liking so far the past few weeks, as we're kind of not sharing as much of the articles, is a lot of Twitter posts. Now, this guy, Benjamin Cowan, again, I've followed him for a long, long time. Again, note says here that I don't follow him, but this is because I'm on the certified crypto Twitter and not my personal. But however, I do, and I have done on my personal Twitter for quite some time. Now, it says here then that in July, in fact, do you know what? Let me just make this post a little bit larger, make it easier for you to read or see. But in July 2019, altcoins were at the same valuation against Bitcoin that they are today. While timeframes do not have to align perfectly, this chart still suggests that altcoins could collectively drop another 40% against Bitcoin. It's called the altcoin reckoning for a reason. Now, this, like we says, is at a crucial point here because it's very similar. And again, like he says, it doesn't mean that time frames need to match up, but we're at a very similar time as we were in 2019 before we saw a sell-off on altcoins compared to Bitcoin. Will it happen? Potentially. Now, he goes on to tweet here as well. This does not mean that you cannot have occasional bounces on alts to Bitcoin pairs. History shows us that markets move... I'm not even going to try and waste that word. In fact, can you even see that? I don't think you can because the camera is covering it. Anyway, it does say history shows us that the markets do move and bounces do not discount a macro thesis on alts to Bitcoin pairs. Now, alts to Bitcoin pairs are not completely different, but they are very different to alts to USDT, which we normally look at. So again, there's many ways to look at charts. Again, just to kind of cover off what I was mentioning already. It's not a new tweet, but again, just to kind of cover off what I was mentioning already. It's not a new tweet, but the CEO, just want to make this very, very clear, the CEO of BlackRock, again, has trillions of dollars under assets, under management, just called Bitcoin digital gold on live television. The world is crazy. No one would have expected this from crypto just a few years ago, but here we are now. It's happening. Now, this is another point. I'm sorry for all the focus on the ETF stuff, especially the BlackRock, but it is such a big deal, and I feel like people are still not jumping on board as a retail investor for whatever reason. So I like to cover it as much as I can to make sure that you are hopefully clicking and realizing how positive and how bullish this is. Anyway, it says here, Fink's pro-BTC remarks today should not be underestimated. Openly gave BlackRock's stamp of approval to Bitcoin broadly, but also as an acceptable and arguably superior alternative to gold. This will be consequential in terms of impact on psychology in the asset management world. Now, essentially what this is saying is Fink is, again, Larry Fink, the BlackRock guy. He is saying that Bitcoin is potentially a better investment than gold. If you look at the books for these guys and what they have under management, they hold gold as a massive portion of their assets for customers because it's a good, in their eyes, it's a good place to invest their money. Gold, solid investment. Well, he's now saying that Bitcoin is probably a superior asset class to gold, and he's saying it on TV, live TV. Was it CNBC? I think it was he was on. He's publicly saying this, that it's better or superior, but yet people are still questioning whether they should invest in it or not, or whether they should learn about it or not. Crazy. It's a crazy world we live in, but hey ho, whatever it may be, as long as you're investing in it and you feel happy, and as long as I'm investing in it and I feel happy, that's all that matters at this point. But yeah, anyway, BlackRock CEO, again, goes on to confirm how he is approving Bitcoin. He will be expecting an ETF approval, hopefully later this year or early 2024, which will then help Bitcoin grow and the masses see it and potentially invest in it as well. So yeah, very, very exciting. That's all for the ETF news, and that's all for the news today on this episode of Coffee and Crypto. Thank you again for tuning in to today's video. Please drop it a like, drop me a comment, let me know how you thought today's video went. If there's anything you'd like to see covered in future videos, of course, drop them below in the comments. If there's anything else you want from me, from my team, from anyone else behind the scenes here, or you want to just chat to our members within our community, please consider joining the Discord. It's on your screen right now. There's a link today in the description. Consider joining on a monthly subscription. Check it out, have a look around, check out years of history that we've posted over, years, of course, about crypto and about some of the financial markets as well. And I'd love to speak to you all in the chat room as well. So look, that's all for me today for this episode of Coffee and Crypto. Thanks again, like I said, for tuning in. I will see you all tomorrow for another episode of Coffee and Crypto. My name's Don. Hope you all have a great day. I will see you very, very soon. See ya.